Trump's tariffs, impact on global economy and inflation. The dark side of protectionism, how Trump's record-breaking tariffs threaten to derail the global economy. In a shocking move that's left economists and world leaders reeling, President Donald Trump's administration has unveiled a set of reciprocal tariffs that could have far-reaching consequences for the global economy. But here's where it gets really concerning. These tariffs, which range from 10% to 41%, represent the highest rates since World War II. Yes, you read that right. We're talking about a scale of protectionism that hasn't been seen in over 75 years. So what exactly does this mean for the US economy and the world at large? According to a sobering analysis by Bloomberg Economics, these tariffs are likely to put a significant dent in economic growth while driving up prices. But that's not all. They'll also have a profound impact on the global economy, which is still reeling from the aftermath of the pandemic. To put this into perspective, let's look at some numbers. According to Maeva Cousin, chief trade economist at Bloomberg Economics, these tariffs will increase the average US duty to 15.2% from 2.3% in 2024. That's a staggering jump, and one that's likely to have serious consequences for businesses and consumers alike. But here's the part that most people miss. The real victims of these tariffs won't be the countries they're aimed at, but rather the American people themselves. With prices set to rise and economic growth slowing, it's ordinary citizens who'll be left to pick up the tab. And let's not forget the impact on the global economy, which is still struggling to recover from the pandemic. Of course, there are those who argue that protectionism is necessary to safeguard American interests. But is this really the right approach? By imposing record-breaking tariffs, is the Trump administration risking a global trade war that could have disastrous consequences for everyone involved? We want to hear from you. Do you think Trump's tariffs are a necessary evil or a recipe for disaster? Share your thoughts in the comments below, and let's get the conversation started. Markets in turmoil. Trump's new tariffs. Weak jobs report explained. The recent announcement of President Donald Trump's new tariff policy has sent shockwaves through the financial markets, raising significant concerns about the future of the economy. This shift marks a dramatic departure from decades of free trade, ushering in a new era of protectionism that could have far-reaching implications for consumers and businesses alike. But here's where it gets controversial. The impact of these tariffs may not be felt immediately, yet they could lead to higher prices for everyday goods in the near future. On August the 7th, a new trade policy will take effect, affecting nearly every nation and solidifying a break from the long-standing principles of free trade. Following the release of a disappointing jobs report, which revealed that the US economy added only 73,000 jobs in July, the stock market reacted negatively. The Bureau of Labor Statistics also revised down the job totals for May and June by a staggering 258,000 jobs, raising alarms about the health of the labor market. Diane Swonk, chief economist at KPMG, described the revisions as stunning, indicating that the labor market is currently stalling. The new tariffs will impose a universal rate of 10% on countries with which the US has a trade surplus, while those with a trade deficit will face a higher rate of 15%. Notably, Canada will see its tariffs rise to 35%, although goods compliant with the United States-Mexico-Canada agreement will be exempt from this increase. This could lead to a complex landscape for businesses trying to navigate the new costs associated with importing goods. The job growth numbers for July were particularly disheartening, with the revisions indicating that the labor market is experiencing its weakest performance since December 2020. Joe Brusuelas, chief economist at RSM US, characterized the report as the worst major economic update since the pandemic began. The volatility in the stock market was palpable, with the CBOE Volatility Index, VIX, spiking by 22% as traders grappled with the implications of the new tariffs and the weak jobs report. As the markets opened lower, the Dow Jones Industrial Average fell by 615 points, or 1.4%, while the S&P 500 and Nasdaq also experienced significant declines. Investors reacted swiftly to the news, with Treasury yields dropping, as they sought safety in bonds. The US dollar weakened and gold prices rose, reflecting a flight to safe haven assets amid uncertainty. The tariffs, which are set to increase the cost of imported goods, will not immediately burden consumers, as businesses often absorb some of the costs. However, as companies adjust to the new economic landscape, consumers may soon feel the pinch in the form of higher prices. For instance, electronics from major suppliers like India and Taiwan will see tariffs rise to 25% and 20% respectively, potentially leading to increased prices for televisions, computers, and smartphones. Moreover, the tariffs on clothing and footwear from countries such as Vietnam and Bangladesh have also increased, which could affect the prices of everyday apparel. The market's reaction to these announcements has been swift and severe, with many investors expressing concern over the potential for prolonged volatility. In a broader context, the new tariffs could distort competition between US companies and their foreign counterparts, particularly in industries where American firms produce domestically. However, many foreign producers compete more directly with each other than with US companies, which complicates the economic landscape further. As the situation continues to evolve, it raises important questions about the future of trade relations and the potential consequences for the global economy. Will these tariffs ultimately lead to a stronger domestic market, or will they hinder growth and innovation? The debate is likely to continue, and we invite you to share your thoughts in the comments below. Do you believe that the benefits of protectionism outweigh the potential drawbacks? Let's discuss.